Hey everyone, welcome back to Corporate Decoder. Today BAER is filing an 8K, and this meeting's results might show us where the company is headed. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just held its annual shareholder meeting, and we're looking at how the votes turned out on key decisions, including who is leading the company. Bridger Aerospace Group Holdings Incorporated just held its 2026 annual meeting of stockholders on the 4th of June. It sounds like a pretty standard corporate event, but the voting results from this meeting can tell us a lot about shareholder confidence and how the company is being run. This filing, a Form 8K, is basically a report of significant events that happen at a company. Think of it as a timely update for investors when something important occurs outside of the regular quarterly reports. For this filing, the big news is the outcome of the shareholder votes. Now let's talk about the company itself. Bridger Aerospace Group Holdings Incorporated, trading under the ticker BAER on the Nasdaq, is involved in the aerospace industry. We have seen news about them securing contracts like a $30 million deal with the US Forest Service and a 5-year contract for the US Department of the Interior. However, there was also a headline from Seeking Alpha in September 2025 that suggested Bridger Aerospace Group cannot cover its capital costs, which is definitely a concern to keep an eye on. The stock price has been quite volatile, trading recently around 43 cents. The company has common stock and warrants. The common stock is what most people think of when they buy shares of a company representing ownership. The par value is a very small nominal value assigned to shares, in this case just 0.010 of a cent per S-share, which is pretty standard for publicly traded companies. The warrants, on the other hand, give the holder the right to buy shares of common stock at a specific price, which is $11.5 here before a certain expiration date. These are often issued alongside stock or bonds to make them more attractive to investors. With the current stock price being so low, these warrants are likely out of the money, meaning it is not currently profitable to exercise them. Bridger Aerospace Group Holdings Incorporated has elected to be treated as an emerging growth company. This means they can take advantage of some relaxed reporting requirements, which is common for newer public companies. They have also chosen not to use the extended transition period for new or revised financial accounting standards, meaning they will adopt new accounting rules as they are released, just like larger companies. This section details the submission of matters to a vote of security holders. It is the core of this filing, showing us exactly what shareholders voted on and how they voted. The first item voted on was the election of directors. Shareholders re-elected 3 Class I directors. These are the individuals responsible for guiding the company. Dan Drohan, Howard III, and David Schellenberg were all voted in to serve until the next annual meeting in 2029, or until their successors are chosen. Looking at the votes, all 3 directors received a large number of votes for, with well over 21 million votes in favour for each. For Dan Drohan, there were 21,972,048 votes in favour, 692,505 votes withheld, and 21,106,276 broker non-votes. Broker non. Votes happen when a broker holds shares for a client but doesn't receive specific voting instructions, so they do not vote those shares. The high number of broker non-votes here suggests a significant portion of shares are held in street name by brokerage firms. H. Wyman Howard III received 21,637,987 votes, for 1,026,566 votes withheld, and the same 21,106,276 broker non-votes. David Schellenberg garnered 21,998,735 votes for 665,818 votes withheld, and again 21,106,276 broker non-votes. The overwhelming support for these directors by those who did vote is a positive signal of shareholder trust in current leadership. Next up was the ratification of the appointment of Crowe LLP as the company's independent registered public accounting firm for the fiscal year ending the 31st of December 2026. This is essentially a shareholder rubber stamp to ensure the company is being audited by a reputable and independent firm. The shareholders overwhelmingly ratified Crowe LLP's appointment. There were a massive 43,334,859 votes in favour. This indicates strong shareholder agreement on the choice of auditor. Only 354,286 votes were cast against the appointment, showing very little opposition to the chosen accounting firm. There were 81,684 abstentions, meaning some shareholders chose not to vote on this particular matter. The strong approval of the auditor is a good sign for transparency and governance. Finally, we see the signature of Justin D. Mogford, General Counsel and Corporate Secretary, dated the 5th of June 2026. This officially submits the report on behalf of Bridger Aerospace Group Holdings Incorporated. This filing primarily concerns the outcomes of their annual shareholder meeting. The election of directors saw strong support for the nominees, which is a good sign of confidence in the current leadership. The ratification of the independent accounting firm also passed with overwhelming support, reinforcing trust in the company's financial oversight. While the warrants are currently out of the money given the stock price, the meeting's results themselves indicate a stable governance structure for now. What I'm actually looking for is how the company plans to address the issues hinted at in that Seeking Alpha article about capital costs, especially given the low stock price and out of the money warrants. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.